Hello investors, today is the second video of our series, Stock Investing Strategy. In the first video we look at sales, and in this video we will look at driver number 2. Hello investors, this is the second part of our Stock Investing Strategy, and we're looking at the second driver. In the first video we looked at the first one, which was sales. So sales of a company really being one of the most important driver. The more the company sells, the more they make money, the more your shares will appreciate in theory. But in reality, there's a second driver that is very important, if not more important. It's actually out of the sales, how much money does the company actually keep? And that's earnings, earnings per share, EPS, right? So earnings is really what the company is making after they pay all their bills and employees and such. So where do we start here to look at earnings? So we can use several widgets. So you don't need the profile here, but you need the matrix. You just click on that widget here, and you can look at earnings and sales. So you can toggle between the two. The earnings number are here. Same thing on the matrix. You compare 1.24 to 2.18. You get a 76% growth. You can look at the acceleration as well, which is minus 28% compared to, that's comparing those two numbers, 76 and 105. So if I look at this company, I can see that they publish the last three numbers were 189, 1.8, and 2818. That is a 136%, 105%, and 76% growth. So pretty high up there, right? So how do I look at stocks that have great earning per share numbers and growth? Well, you will use the screener. So the screener here, you would be using that section called EPS matrix, and then from there you have all the fields relevant to earnings and sales. So earning EPS, so earning per share surprises, I can click on that. I have 2,147 stocks. I can put even more market cap if I want, but let's say 1 billion is good, and I can start filtering. So earning per share surprises, I want that number to be above 0. I want the company to surprise with the numbers. That's usually what makes it attractive when you follow stocks. And then the second thing is the EPS quarter over Q minus 4 percent change. So again, this is this number here. 76 comparing 218, the last number, with 124. Last number has been published on that date. Next one is this date. So how do we filter? We just move the scale here to say 15% or 13%. Actually, 15 is better, right? And here we have 490 companies. Okay, so now start to get more interesting companies with very good and high growth, at least in the last quarter. I also want to look at the previous quarter, so Q minus 1 compared to Q minus 5. So I want that growth to be at least 1%, meaning positive, right? Then I want to compare the acceleration. So the acceleration is important, and I want that to be positive too. So that's the acceleration between this quarter and the next. I don't want, high growth and then actually declining growth. I want increasing growth. So that is good. In terms of increasing, you can also look at the sequential increase in earning per share. This is actually how many quarters in history earning per share has been increasing. So this is very important because you want a trend. So that's giving you this. Same thing, we want a trend in acceleration. So not only I want the increase, a trend in the increase in growth, but I also want a trend in acceleration. So I want at least 2 quarters of acceleration, positive acceleration for these companies. So now I only have 29 stocks. So that's interesting. So really companies with high growth numbers, growing and accelerating at the same time. And finally, we can look at the sigma earning per share, which is here. The sigma earning per share is basically taking a bell curve, drawing some sort of a historical bell curve of all the earning per share going back in history, and then plotting it, and you can see it goes from minus 3 standard deviation to plus 3 standard deviation. And obviously you want positive side of that curve, which is maybe above 1 standard deviation. And you really have only companies that are making new ground in terms of earning per share, right? So you have companies that are really never had these type of earnings before, right? These companies are 2 standard deviation away, so really breaking new ground, like Teradyne. They really usually earn between 50 cents to 60 cents. Now they earn $1.33, which is very high up. So that is really important. Like Dollar General, for example, usually made over the last 2 years about 1 to 1.5 or 1.7. Right now it's 2 and 3. So it's really abnormal earning numbers, and keep growing. As you can see, the stock also has been going up and rallying non-stop. So again, very important metrics. I can filter. I got 22 stocks now, and I can carry on and look at revision. But we will look at that in another video. I hope this was useful, and that you can use it for your stock screening. Again, very high quality analytics for your research at EPSmomentum.com. Thank you for your attention.